Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 18th day of March, 2016, and this is the Daily Report for Gold and Silver, our weekend review, in which we combine it with trending markets to cover a larger scope and breadth of market activity this week. And oh boy, we had an interesting week, a roller coaster ride in gold, equities on fire, oil reaching $40 per barrel and then coming down, and the dollar trading lower for the third week in a row. First, let's take a look at gold prices. Gold is going to close off today, off by about $3 at $12.54. It is traded to a high of $12.66, a low of $12.48. We came out looking for the market to hit as high as $12.72. Earlier this week, we did reach that high when we had an intraday high of $12.71.90. So traders, as you know, we have been absent from the market in terms of having an active gold or silver trade on this week, pulling profits on the 9th of March, in which we pulled a $37 profit, waiting to see if we're going to go into a full-blown correction, and if so, where that would go, or are we consolidating simply within this market? And this is a very short-term chart, of course, because when we look at a weekly chart, and that's what I've pulled up just now, the activity that we have seen over these last couple of weeks, and that's represented by these two candlesticks, have been very similar, I believe, to what we saw about 4 weeks ago, or call it really mid-February, in which the market had spiked up, made this high above $12.60, and then for the following 2 weeks really went through a consolidation period. That would be these candles right in here. And then, of course, we saw that tremendous spike 3 weeks ago, and as I said, now followed by these two consolidating candles. We are in a correction of sorts. I think we're going to see a very shallow correction, and I'm simply looking at the proper point to re-enter the market from the long side. And in fact, we could have already seen the lows this week when you consider that the market hit a intraday low, or an intra-week low, excuse me, of about 12.27. Now, I do have one fib retracement from the onset of this rally at about 10.40 up to these tops at 9.87, and a 25% retracement comes in at 12.27. Now, it also must be noted that the classic level that we look at, which is 23%, I've just adjusted our fib numbers themselves, and that comes in at 12.31. As I said throughout the week, I was under the belief that we would, once we had this dynamic rally that came in during the FOMC meeting just following the announcement, market was trading at about 12.60, and our studies had shown us that we would possibly hit a top as high as 12.72. In fact, the top was 12.71.90, and I believe that completed B wave to our 5 here, and then our A, our B, and I believe that we're now in our final C, which brings us to our final chart in gold. Really the big picture chart, because we're looking at, although it's daily candles, it's highly compressed, and we've got our major fifth concluding at our historical and record high. We go into a protracted, extended, long correction, wave 1, wave 2, wave 3, 4, and then I believe we concluded this major A back at the end of last year, beginning of this year, and we went into our rally mode. And so everything that I've been talking about in terms of a subcount, and this subcount here of 1, and the fact that we're in 2, all falls within this particular move right here. In other words, I believe we could see a small move down and then a final clip up over 13, and that's what I'm really looking to see. Dow Jones Industrial Average closing strongly higher today. In fact, we saw the greatest volume of the year in U.S. equities today, up about 120 points at 17,602. And of course, that puts it up almost 0.75%. When we compare that, of course, to our S&P, that is going to close higher on the day. We are still going into settlement, but as you can see, up roughly 8 points at 2038. And traders, that of course brings us to our current trade. We are long a Standard & Poor's 500 E-mini. We got long at 1979. Market looks like it settled at 1937. Our stops are just below 2000 at 1997. Obviously, maintain your long position, maintain your stop just below 2,000. We will look to raise them. We'll send out a special trade alert Monday or Tuesday to do so. Now, there's a couple of things we want to look for. One very short term, one a little bit more long term. First thing is resistance. We currently are pegging our resistance at about 2043. Of course, the pundits are looking at 2050, but they're also looking at the Standard & Poor's big contract, not the E-mini. And I think for adjustment, we're looking in the same place. Second thing is that we have, after having a extended multi-week rally, broken back above our 200-day moving average. Traders, that's absolutely significant. It's absolutely noteworthy, which brings me to my second point, Dan. We are definitely in rally mode. Absolutely no doubt about that. But as I compress this chart so we can look at the action of both the 50-day and 200-day moving average, there's no doubt to be in an extended rally, a bull market, you've got to be trading above the 200-day moving average. And that's this blue line here. Now, here's the interesting thing. Right now, our 50-day moving average, obviously because of the downside pressure prior to this rally, has taken the 50-day moving average and putting it well below our 200-day. You can see how that happened right in here also. Now, at the point in which they cross, though, and you have the 50 solidly above the 200-day, well, traders, that really is telling you you've got a real bull market going. So that's the second characteristic we want to see if the market can unfold, assuming that the market continues to track higher and, most importantly, goes towards these record tops. Now, crude oil closed a little bit lower today, off 86 cents per barrel, about a 2% drop, 39.34. But traders, of course, the real picture with crude oil is that for the last 5 consecutive weeks, same time period as the equities markets have been experiencing an extended rally, crude oil has also experienced this rally, in which it came off of these lows at $26 a barrel before finding some resistance at about 40. It is very important because we've now stabilized oil prices. They're well above these lows, and so we do have that having an extremely positive effect on U.S. equities. Now, dollar did close nominally higher on the day, up about 1/3%, 95.76. However, the real picture is that the dollar has been under tremendous pressure, closing lower on the week, in fact, lower for the last 3 weeks. And traders, that becomes very evident when we look at a weekly chart of the US dollar, and you can see that these 3 last consecutive weeks have defined a downside move in the dollar. Of course, reciprocally, we have seen the euro dollar gain in value, and right now we have broken through what I consider to be, on a technical basis, a pretty critical level at around 95, 95.30. Now, the fact is we closed at 95 even. So traders, absolutely no doubt, most interesting week in trading. As I said, in terms of gold, let's see how it reacts on Monday. Do we have a little bit further to go in terms of this current correction after hitting these highs? So we are sidelined as we go into the weekend. Maintain your current long position in your Standard & Poor's. 1979, if we go into a protracted rally, this could be a home run trade. We'll look to actually add to this position, and our criteria for doing the add will be effectively trading above resistance at 2043, because if in fact we see the S&P trade to that level and break above this level, my sense is that it's going to flirt and try to go back to these record tops, and we certainly want to double up if that happens. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.